Welcome to Sectors Up Close. I'm Elena Casas. Today we're going to revisit the outlook for clean energy stocks, and my guest is Sam Adams, CEO of Vert Asset Management. One could argue that clean energy funds have done a very good job of cleaning out investors' pockets. The Nasdaq Clean Energy ETF, or QCLN, is one of the biggest. It's lost 34% over the past year, while the wider S&P 500 rose 25%. Unlike its peers, QCLN has significantly underperformed the S&P 500 over the past 1, 3, 5 and even 10 years. Add into the mix a disastrous performance by President Joe Biden in the recent TV debate, which increased the odds that Donald Trump will be back in the White House following November's presidential election. It's no secret that Trump, unlike Biden, favours investments in fossil fuels over clean energy. But how much could the election further pollute the outlook for the sector? Well, let's ask Sam Adams, CEO of Vert Asset Management. Sam, we have to start with the election. Markets are increasingly pricing in an administration in November that could be directly hostile to clean energy. Shouldn't investors be worried about that?
Well, I think investors should be worried about the environment and the climate for sure if Donald Trump is elected. But I'm not so sure the case is so straightforward that a Trump presidency would be bad for green energy stocks, at least not all the way across the board. And there's a couple of reasons for that. These days, it's kind of hard to tell the difference between Trump and Biden with regards to protectionist policies. And a lot of times that knee-jerk reaction we have to green energy stocks say, well, if they don't have policies on their side, they're going to struggle. Well, you know, if Biden is slapping tariffs on China and Trump is slapping tariffs on China, it's not really a question of which president is going to do that. It's more nuanced downstream. Are those tariffs going to hurt U.S. solar manufacturing? Are they going to benefit U.S. solar manufacturing? And I don't think we know enough about Trump's plans to be able to say that it would benefit this group of stocks or hurt these groups of stocks. And so I think that knee-jerk reaction that it's all going to be bad for green energy stocks is probably a risky bet.
Under the Biden administration, though, clean energy firms have benefited from a favourable political environment and billions of dollars under the Inflation Reduction Act. Why don't you think that's translated better into their stock value?
Yeah, well, some of them have enjoyed better stock prices as a result. A lot of them have put more projects into place or started those projects because of the very lucrative subsidies that the IRA, the Inflation Reduction Act, provided. But let's remember that there's a bigger macro picture here that renewable energy, green energy, is a capital-intensive business for the most part. And it's all about raising large amounts of capital and then deploying that capital and putting infrastructure usually into the ground like solar panels or plants or those types of things. And those factories take a lot of money. And when you have an environment where interest rates are really high and inflation is high, it's just very hard to do more for those projects. It's very hard to get them going, and it's very hard for stock prices to, to benefit from directly from those subsidies in that environment. I think as soon as you see interest rates come down, inflation come down, you'll see more companies benefit, more stock prices being lifted as a result.
The business case for these stocks, though, was supposed to be that after that very capital-intensive investment, it would pay off in the form of cheap electricity and benefits to the shareholders. But we're still not quite seeing that, are we? The iShares Clean Energy ETF is down 28%, and over the last 3 years, 41%. When are you expecting this to pay off?
Yeah, clean energy investors have gotten a couple of black eyes over the years, not just recently, but early on in the clean tech revolution in the early 2000s. And we need to be careful here about how we play this clean energy revolution, because there isn't any real doubt anymore that we're going to switch from fossil fuels to green energy, not just because that's what most people want, which is the case, but because in the long run, it is cheaper. Now, that's the question, though. Who benefits from the cheaper energy prices? Is it the utilities that install it? Is it the distributors? Is it or is it the recipients of that greener and cleaner energy and the lower cost energy?
Over the last couple of years, though, we've actually seen energy investment go the opposite way in some cases, into fossil fuels again as the price of oil has risen. Could that happen more? Could we see more money moving back into fossil fuels and away from clean energy, especially if we're in a regulatory environment that improves the business case from fossil fuels, as we've seen this week with the Chevron decision from the Supreme Court, which could make it harder for environmental regulation to crack down on fossil fuels?
Absolutely. There's nothing that says this transition will be monotonic or steady, right? It'll be 2 steps forward, 1 step back, and sometimes even multiple steps back. When you have the price of oil rise, you get a bunch of oil and gas CEOs saying we're abandoning we're toning down the renewable energy investments, and we're backing the truck up and filling in for more fossil fuel development. That's what's going to happen over and over again over the next couple of decades. So let's not expect a smooth ride here.
Sam Adams, CEO of Vert Asset Management, thank you so much for that analysis. Well, that's your look at clean energy stocks. I'm Elena Casas, and this is Reuters.